Are you looking to maximize your investment returns while minimizing your risk? Look no further than dividend investing. And when it comes to dividend investing, there's no better place to start than with the Dividend Aristocrats. These are the elite group of companies that have proven their commitment to paying reliable and steady dividends year after year. So, get ready to discover the top 12 high-yield dividend aristocrats for 2023, and learn why these dividend stocks should be at the top of your investment portfolio. But don't just take my word for it, watch this video and see for yourself why these dividend aristocrats are the keys to unlocking long-term financial stability and prosperity. And don't forget to hit that subscribe button and turn on notifications so you never miss a single update from us. So, what are you waiting for? Join us on this exciting journey and discover the world of dividend aristocrats. The Clorox Company, our number 12 on the list of high-yield dividend aristocrats, is a household name that has been providing top-notch consumer and professional products for years. With more than 80% of its revenue coming from products that rank first or second in their global categories, the company has consistently been able to achieve annual revenue of over $7 billion. Recently, the company released its first quarter results and impressed investors with better-than-expected revenue and earnings per share. Although revenue fell slightly compared to the previous year, it still exceeded expectations. Despite a decrease in sales volume, the company's strong brand reputation and pricing strategies helped to mitigate the impact on overall revenue. However, the company faced challenges in terms of gross margin, which saw a decrease due to rising costs and declining volumes. But, with a solid track record and a commitment to cost reduction initiatives, the Clorox Company remains a solid choice for those seeking a stable source of income through dividends. With a current dividend yield of 3.3%, this high-yield dividend aristocrat is worth considering as part of a well-diversified portfolio. ExxonMobil is a true powerhouse in the energy sector, boasting a market capitalization of over $300 billion and a dividend yield of 3.5%. With a diverse portfolio that includes upstream, downstream, and chemical operations, the company continues to be a reliable player in the industry. In its recent third quarter 2022 earnings report, ExxonMobil reported an all-time high in production in the Permian region, along with a 7% increase in earnings per share and an impressive beat of analyst consensus by 65 cents. The company's strong performance was driven by a combination of factors, including favorable sanctions against Russia, improved refining margins, and a surge in gas prices. Not only did ExxonMobil increase its dividend by 3%, extending its impressive dividend growth period to 40 years, but the company also has a $30 billion share buyback program in place for the 2022-23 fiscal year. These actions demonstrate ExxonMobil's commitment to delivering consistent returns to its shareholders and its confidence in its continued growth and success in the future. Medtronic plc, MDT, is a world-renowned manufacturer of biomedical devices and implantable technologies that provide services to doctors, hospitals, and patients in over 150 countries. The company operates in 4 business segments: cardiovascular, medical surgical, neuroscience and diabetes, and boasts a strong product portfolio to drive its future growth. Medtronic has a long-standing tradition of increasing its dividend, with 45 consecutive years of annual increases, most recently increasing it to 68 cents per share in May 2022. Despite this, its second quarter fiscal 2023 results showed a decline in revenue by 3% and earnings per share by 2%, largely due to the impact of a strong dollar. Although the company's revenue for the quarter saw a 2% increase from the previous year, the slow recovery of supply and modest market procedure volumes in some businesses impacted its performance. This led Medtronic to lower its annual earnings per share forecast from $5.53-5.65 to $5.25-5.30. AbbVie is a pharmaceutical company with a dividend yield of 3.7%. It was spun off from Abbott Laboratories in 2013 and is known for its leading drug, Humira, which contributes significantly to its revenue. However, Humira, one of its most important products, faces competition from biosimilars in Europe and is set to lose patent protection in 2023. Despite this, AbbVie has a large and diverse product portfolio, including new drugs such as Skyrizi and Rinvoq, that drive its growth. In the third quarter of 2022, AbbVie's revenue was $14.8 billion, a 3% increase from the same quarter the previous year. The company's earnings per share also rose 29% to $3.66, beating analyst expectations by 10 cents. Although ABI has revised its guidance for adjusted earnings per share for 2022 to a range of $13.76 to $13.96, the company remains a leader in the healthcare industry. Amcor plc is a global leader in packaging solutions for various consumer products including food, pharmaceuticals and medical products. With its headquarters in the UK, the company has recently announced its fiscal 2023 first quarter results. The company's sales increased 9% compared to the same quarter of the previous fiscal year, with price increases contributing to the growth. Net sales, adjusted for currency fluctuations, also saw a 3% increase, with a slight decline in volumes. The company's net income remained stable year over year. Additionally, Amcor declared a quarterly cash dividend of $0.1225 per share, which marks the third consecutive year of dividend increase. The company has provided guidance for the fiscal 2023, projecting EPS growth of 3% to 8% and adjusted free cash flow of $1.0 billion to $1.1 billion. The management team has also revised its adjusted EPS guidance to 77 cents to 81 cents, compared to the analyst consensus of 81 cents. Essex Property Trust is a real estate investment trust that specializes in multifamily residential properties. Founded in 1971, the trust has a portfolio of over 60,000 homes and generates annual revenues of approximately $1.6 billion. In the third quarter of 2022, Essex reported an increase in basic FFO per diluted share of 18.3% to $3.69 and a 12.7% increase in gross income from identical properties. However, there was a decrease in net income due to unrealized losses in marketable securities and non-core co-investments. Essex has updated its guidance for 2022, expecting FFO per share to be between $14.42 and $14.52, and diluted net earnings per share to be between $4.80 and $4.90. The trust also reaffirmed its guidance for revenue growth of 10.0% to 10.6% and earnings per share growth of 13.0% to 14.0% for the full year. With a dividend yield of 4.2%, Essex Property Trust remains a solid investment option in the real estate sector. Federal Realty Investment Trust, FRT, was founded in 1962 and is a real estate investment company that operates primarily in owning and renting shopping malls and redeveloping mixed-use properties. The company's business model involves using rental income and external financing to acquire new properties and create a snowball effect of increased revenue over time. The company's portfolio is diverse, with tenants from various sectors. On November 3, 2022, FRT released its third quarter results, which showed cash from operations per diluted share of $1.59, a 5% increase compared to the previous year, and same property operating income growth of 3.7% for the quarter. FRT also signed a record number of leases, reaching 119 leases signed for 562,859 square feet of comparable space, and ended the quarter with a 92.1% occupancy rate, a year-over-year increase of 190 basis points. The dividend yield for FRT is 4.3%. Franklin Resources, also known as Franklin Templeton, is a global investment management firm founded in 1947. The company offers a range of investment management services to its clients and has a diverse set of products including mutual funds, institutional portfolios, and exchange-traded funds. Franklin has a solid reputation, having consistently paid dividends for 42 consecutive years with a current dividend yield of 4.7%. In November 2022, the company released its fourth quarter results for the fiscal year ending September 30, 2022, reporting a decrease in assets under management and operating revenue compared to the previous year. However, the company still managed to generate adjusted net earnings of $394 million, or 78 cents per share, and repurchased 1.0 million shares during the quarter. For the full fiscal year 2022, Franklin reported adjusted net earnings of $3.63 per share, down 3% from the previous year. International Business Machines, commonly referred to as IBM, is a renowned information technology company offering integrated enterprise solutions in software, hardware, and services. It operates mission-critical systems for large multinational clients and governments and provides end-to-end solutions. IBM is divided into 4 business segments, namely software, consulting, infrastructure, and financing, and reported a revenue of approximately $57.4 billion in 2021. On October 19, 2022, IBM announced its third quarter 2022 results and reported a 6% increase in company-wide revenue from $16,339 million to $17,739 million. Despite a 2% decrease in adjusted diluted earnings per share from $1.84 to $1.81 year-over-year, IBM's software revenue saw a 7% growth to $5,811 million, driven by the growth of its hybrid platforms and solutions and an increase of 33% in transaction processing. However, the company's GAAP diluted earnings per share declined to a loss of $3.55 in the quarter due to pension settlement charges. The consulting revenue increased by 5.4% and growth was reported to be strong in constant currency. 3M is a global conglomerate known for its wide range of products and solutions in various industries, including healthcare, safety, electronics, and energy. With over 60,000 products and a strong presence in more than 200 countries, the company has a large customer base and a workforce of 95,000 employees. In the second quarter of 2022, the company reported a 3% decrease in revenue to $8.7 billion and a 10% decrease in adjusted EPS compared to the same quarter in the previous year. Despite this, the company made a major announcement of spinning off its healthcare business, which generates over $8 billion in annual sales and is expected to close by the end of 2023. Additionally, 3M updated its outlook for 2022, with adjusted earnings per share expected to be in the range of $10.30 to $10.80. Leggett & Platt is a multinational manufacturer of engineered products with a strong presence in the furniture, bedding components, shop fittings, die castings, and industrial products industries. With over 20,000 employees across 14 business units, the company is a leading player in its field. Leggett & Platt is also a dividend king, with an impressive record of 50 consecutive years of increasing dividends and a current dividend yield of 5.5%. In its recent third quarter earnings release on October 31, the company reported revenue of $1.29 billion, a 2% decrease from the prior year quarter, and earnings per share of 52 cents, down from 70 cents per share in the prior quarter. The company has revised its revenue forecast for the current fiscal year, expecting growth of about 1% over the prior year with revenue of $5.1 billion to $5.2 billion. The earnings per share guidance range has been set between $2.30 and $2.45 for 2022, a decline of almost 20% from 2021, using the midpoint of the current guidance range of $2.38. VF Corp is a leading global apparel, footwear and accessories company, known for its iconic brands such as The North Face, Vans, Timberland and Dickies. With over a century of experience, the company generated over $11 billion in revenue in the past 12 months. VF Corp has a strong commitment to shareholder returns, as evidenced by its 7.8% dividend yield and a 50-year history of consecutive dividend increases. In the second quarter 2023 of its fiscal year, the company saw a decline in revenue by 4% and a drop in adjusted earnings per share by 24% from $1.11 to 73 cents due to high cost inflation, decreased revenue, and increased inventory and fixed assets in China. Despite this, the company is optimistic about the future and is forecasting revenue growth of 5% to 6%, but has adjusted its earnings per share forecast downward to $2.40 to $2.50. So, to put a bow on it, the video has highlighted the 12 best high-yield dividend aristocrats, each with a proven track record of consistent growth and stability. These stocks are a great option for those looking for steady income and a long-term investment strategy. For the viewers, it is important to remember that investing in any stock, including dividend aristocrats, comes with risks. It is always advisable to do thorough research, consult with a financial advisor, and diversify your portfolio. Additionally, it is wise to keep a close eye on the market and monitor any changes that may affect the performance of your stocks. Keeping a long-term perspective and regularly reviewing and adjusting your investment strategy can help you achieve your financial goals. Finally, we invite you to subscribe to our channel and watch other videos about dividend investing and high-yield stocks. We are dedicated to providing valuable and informative content to help you make informed investment decisions. So, join us on our journey to financial freedom and start investing today.